Hey everyone, welcome back to the Thinking Crypto channel, your home for crypto news and interviews. I have big news for you. The SEC has approved an ETF, a crypto ETF, but it's not a direct crypto ETF, meaning it's not a Bitcoin ETF, but rather through companies that are involved with Bitcoin and crypto. But could this signal that a Bitcoin ETF approval is on the horizon? I want to break it down for you. We also have big news around George Soros. Whether you hate him, love him, or neutral about it, his investment firm is holding Bitcoin. We're seeing all the legendary macro investors are now holding crypto, guys. This is very bullish. We're also going to talk about JPMorgan and their statements around Bitcoin and gold and what Michael Saylor had to say about it. In addition, the games JPMorgan's been playing with headlines and narratives to both short and long the market. I'll show you some examples. We also have an old German bank that is coming out of the woodwork to provide, guess what? Crypto custody. All the banks, all the stock exchanges and investment firms are getting involved in this asset class. And we have some big news around some other crypto companies that are entering the market and raising funds. Before we get into it, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, this video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies and you don't have to pay high fees. OKCoin charges low fees. Also, you can stake your crypto, guys, and keep 100% of the rewards. You don't have to pay any fees. There's also a really great referral program where if you refer a friend, you both split $100 in Bitcoin. It's a really great deal, so be sure to sign up, link in the description. Let's take a look at the market here. Not much happening after Bitcoin's massive blast off that we had yesterday. We went over 55,000. Well, now we're cooling down a little bit, and that's okay. Remember, nothing goes up in a straight line. We have to be patient. But the point is we broke out upwards, right, out of the dip that we were in. If we look here in the weekly chart, look at these two green candles, and this rally can continue into next week. And we'll see how things pan out for the rest of the month. So short, from the micro level, from the hourly, daily, and so forth, things are going to get a little bit slow. Then they'll blast off again, a little bit slow, building support levels. From the macro perspective, we're on track. We are on track. This is what we are waiting for, what I've been sharing with you guys. After that respective correction, I told you was coming and that I was expecting a breakout upwards for October into, obviously we're in Q4 and it's happening, right? And if we pay attention to some of the macro level charts, the historical data we'll see here in our respective yearly candle here for 2021, we still got ways to go to match the previous cycles of 2013 and 2017, right? So new all-time highs are certainly coming. This may spill over into 2022, of course, but we're on track to new all-time highs as the market cycles play out. Now, here's the SEC news, guys. SEC approves Volt Equity ETF, providing exposure to Bitcoin-centric companies. Regulators have green-lighted a new exchange-traded fund that provides exposure to Bitcoin industry revolution companies. So this is not a Bitcoin ETF, whether it be physically backed or futures. This is essentially, hey, this pool of companies that are investing in Bitcoin and crypto, you can invest in them indirectly via this ETF. Right? So that's what it is. But this is a good sign. I know some people are going to be like, man, we want a Bitcoin ETF. Not this, but this is kind of the small wins on the way up to the major win. And we know Gary Gensler, he recently said he's in favor of a Bitcoin futures ETF. Now, that's not an ideal ETF as well. We want the physically backed. And as I stated in yesterday's video, and even with my interview with Caitlin Long, it is a double-edged sword. It will bring in the floodgates of money for sure. I mean, we're talking tons of money. But we've seen ETFs be used in traditional financial markets to manipulate those markets, right? But this is why we who are early are lucky. Sometimes you can't stop the reality of these things, right? There's nothing you and I can do about it because that's how the system is. But at least we can ride the wave and momentum, make money off of this before they manipulate it like they did gold and silver and so forth, right? Now, you may have to do some research if you want to find out what I'm talking about there. Obviously, we don't have time to go into that, but the likes of JPMorgan and how they've manipulated silver and many other things. So The exchange traded fund, which was approved on Tuesday, is intended to track so-called Bitcoin industry revolution companies, which are defined as entities that hold a majority of their net assets in Bitcoin or derive a majority of their earnings from Bitcoin mining. So it would be like publicly traded mining companies, MicroStrategy, Tesla, which hold Bitcoin on their balance sheet. So the article continues here. Bitcoin mining, lending, or transacting, according to an SEC filing. 80% of the fund's holdings will be allocated to such companies, the prospectus states. The new ETF will appear as a New York Stock Exchange ARCA listing under the ticker symbol BTCR. So this is a step in the right direction here for the ultimate approval of a Bitcoin ETF. So US securities regulators have been deliberating for years whether to approve their first Bitcoin ETF. Last Friday, the SEC announced it would delay its decision on 4 Bitcoin ETFs by 45 days, pushing back the timelines on the Global X Bitcoin Trust, Valkyrie XBTO Bitcoin Futures Fund, Wisdom Tree Bitcoin Trust, and Krypton, or whatever you call it, Bitcoin ETF to November 21st, December 8th, December 11th, and December 24th, respectfully. So they push back the deadlines. Now, could they be playing the game of let's release this at the peak of the bull run and see what happens? Maybe. Or it's their same old bullshit of like, we're going to keep pushing this back and pushing it back and delay it, which they've been doing for years. Now, I do think they are under more pressure now because a lot of capital is leaving and going to like Canada and other countries that have ETFs, right? And in addition, a lot of big players have entered and thrown their hat in the ring to try to get a Bitcoin ETF approved. So I think there's some pressure here. And look, in Gensler, out of his own mouth, he said he's in favor of like a Bitcoin futures ETF. So unlike other proposals for a physically backed Bitcoin ETF, the newly approved Volt Equity Fund doesn't track the price of Bitcoin or hold the asset in custody. Rather, it seeks exposure to companies that generate a significant portion of their business from Bitcoin-related activities. As such, the Volt product is the closest thing U.S. investors have to a pure play Bitcoin ETF for now. So that's why I said this is a step in the right direction, a small win to ultimately getting a Bitcoin ETF approved. So we shall see what's going to happen, my friends. After a lot of delays, this is a good sign, but we'll still have to wait. But nevertheless, it is good news. It is bullish news. Now, speaking of bullish news, and this isn't, by the way, not an endorsement of George Soros, because people get so emotional. How dare you talk about George Soros? You know what I'm just reporting the news. I'm not endorsing him. I don't care for George Soros, but the fact is, him and people of his caliber, legacy investors and guys who've made wealth, significant wealth. He's on the line in the same line as Warren Buffett and Charlie Munger and these guys. We have Ray Dalio, Bill Miller, Stanley Druckenmiller, and many others that are holding Bitcoin. They're buying crypto, guys. I hope you see what's happening here. You leave your emotions at the door and just look at this, what is happening. This is very bullish. So George Soros Fund owns Bitcoin. CEO confirms the family office owns some coins, but not a lot. Don Fitzpatrick, CEO and Chief Investment Officer of Soros Fund Management, said in an interview at a Bloomberg event this week. She said, I'm not sure Bitcoin is only viewed as an inflation hedge here, Fitzpatrick said. I think it's crossed the chasm to mainstream. Fitzpatrick went on to explain how cryptocurrencies now have a market value of more than $2 trillion with over 200 million users. So they're not going to come out and say, oh, we own this or we own a lot, obviously, because that will move the market significantly. They'll say, oh, yeah, we have some exposure to it. But I guarantee you, once again, because they're the other guys in their wow, just look, sorry guys, I didn't mean to cut you off, but there is a breaking news here. Senator Cynthia Lummis discloses a Bitcoin purchase worth up to $100,000. Well, I know she's a Bitcoin bull, so that's awesome. So let's jump to that, guys, because this is significant. This is someone in the government, the US government. She's a senator, and she's bullish on Bitcoin and crypto. And I think we're going to see more and more people jump into this. So let me give you the details. Senator Cynthia Lummis, Republican out of Wyoming, just disclosed a sizable Bitcoin purchase as the crypto supporter continued to grow her stake in the volatile asset. The Republican senator scooped up the world's largest cryptocurrency on August 16, worth between $50,000 to $100,000. According to a filing on Thursday, the purchase appears to have been disclosed outside of the 45-day reporting deadline set by the Stop Trading on the Congressional Knowledge Stock Act. I love that transparency, right? We need to know what these people are doing. The Congresswoman has been a longtime Bitcoin bull, touting Wyoming as a leader in developing financial institutions to work with the crypto world. So she previously told CNBC that she made her first Bitcoin purchase in 2013 for $330 per token. Wow, I wish I got in at that price. And she said she owned 5 Bitcoins as of the end of June. So she continues to buy more, and she bought the dip. As many of us did, we bought the dip when the market dipped in August, right? July to August. So this is very interesting and bullish, guys. I mean, look at the exposure, right? You got people in government, the macro investors, the legacy, wealthy investors, and individuals are all getting in. What more evidence do you need of where this asset class is going, guys? Now, something I want to share with you guys. So Michael Saylor tweeted the following. It's an article from JPMorgan saying institutional investors are favoring Bitcoin over gold. Now, I do believe that, right? And Michael says the implicit endorsement of Bitcoin by major banks and regulators is going to accelerate the collapse of gold and the rise of Bitcoin as the preferred safe haven store of value for both institutional and retail investors. So I absolutely agree with that. However, shout out to TechDev, who showed an article from May of this year, where from JPMorgan, it says big institutional investors are dumping Bitcoin and going into gold. Now, the article from today, JPMorgan, institutional investors are favoring Bitcoin over gold. So what's happening here? This is why I always say, don't listen to these idiots on CNBC Fast Money. Do your own research. Don't even listen to me. Or I should say, I shouldn't say don't listen to me. I should say, don't take my word as gospel. Go and verify what I'm telling you. Now, clearly, I do some screen sharing here. If you're watching on YouTube, I show you where I'm getting the data from, right? So I'm not making it up or pulling out of my ass. So you need to verify every source, whether it be me, any other YouTuber, but by no means do not listen to Jim Cramer and these guys on CNBC. As I've stated many times, they will invite guys onto their show and kiss their ass for access. And these guys will put out a narrative there for their longs or their shorts. So what is JPMorgan doing here? Why the sudden flip? Did they all of a sudden, the institutional investors woke up one day and they changed their mind? No. In May, they saw the market was peaking. So what did they do? Put shorts in, then put the narrative out. Go out and put sell pressure because you're shorting, and your shorts are going to do well if the price goes down. Now, what's happening here? Why did it flip the script? Even though they're telling the truth about institutional investors are favoring Bitcoin over gold, we're seeing that, right? Soros, all these people, because they put longs in, so they want the price to go up. I hope this is mind-opening and enlightening for you guys. When I first discovered it, I stopped watching CNBC Fast Money and all these things, right? I don't listen to crap they say. I go and I research. I look at the SEC filings. I look at the investments that are being made, the things that have to be disclosed that you can't fabricate, right? Or you can't give an opinion piece on. It is, they got this investment money. They are now working with this company, right? The hard facts, not just, oh yeah, this is happening. Oh, this is happening. No, because those headlines are used to trick a lot of the masses, guys. So I hope you see how these big institutions play the game. Hey, look, hedge funds do it too. And you got to be careful too in the crypto market, because a lot of these legacy guys are going to come into the market, the crypto market, and try to do the same thing. But you and I, who are early, we are riding the wave of smart money. And this is why I always say, you can't just look at technical analysis. Technical analysis is important. It could be the leading indicator, but you also need to look at the news. You need to look at the money that's being invested, who's setting up shop, what are the SEC filings, get a full 360 holistic view of the market So you are more informed as an investor, and you're not moving by emotions. You're looking at and headlines and narratives, but rather, okay, where are we in the market cycle? Who's raising money? Who's partnering with who? What acquisition happened? All of these things, right? And you can do that with the traditional assets like stocks and so forth, and see what companies are doing. Now, check this out. As I said, all the banks, all the stock exchanges are coming. One of Germany's oldest banks taps Fireblocks to custody customers' crypto. The bank will leverage Fireblocks custody technology in a bid to expand crypto services, guys. This is awesome. So freshly inducted crypto unicorn Fireblocks has been selected by Bankhaus von der Heydt. Bankhaus von der Heydt, a 267-year-old privately owned German bank, to steer its digital asset endeavors. It's beautiful, guys. These are things I've been talking about. We've all talked about for years. Those of you who've been with me since the channel started, those of you came in 2018, 2019, we've talked, they were all going to come. Metcalfe's law, game theories playing out. They can't ignore it anymore. That's why we heard Bank of America, they released a statement. This is too big for us to ignore anymore, right? So according to a press release shared with CoinDesk on Thursday, the bank will leverage Fireblocks custody technology in combination with the Fireblocks network to expand digital asset and crypto service offerings to its customer base. Here's a quote: Fireblocks gives us a secure and easy to use platform to develop complex operational workflows, such as moving between asset trading and custody, staking assets in custody, or even a direct integration with lending protocols to extend our service portfolio. Wow, guys, so bullish. This bank was opened in 1754. And kudos to them, because we've seen companies and different financial institutions in the past not get on board with disruptive emerging technology. And, you know, look at Blockbuster, right? So this is a sign of the tide turning here, guys. These guys are all jumping in, so bullish. Now, here's another example of a traditional financial firm that is jumping into crypto. Neobrokerage firm Public.com rolls out crypto trading tools. Of course they did. The $1.2 billion Neobroker is the latest in a string of fintech firms to branch out into crypto. It will support 10 cryptocurrencies at launch, including the meme-based token Dogecoin. So they are a New York-based company, and they're once again launching the crypto tools, and they're joining the group of or at least the growing number of fintech firms that have made the move, according to a report in the Wall Street Journal. See what's happening here, guys? These firms that have nothing to do with crypto, they existed before crypto, they're now adopting it, they're integrating it. Bullish sign. So they will support trading of Bitcoin, Bitcoin Cash, Ether, Ethereum. Why did they put Ether and Ethereum? They're the same thing. Classic, excuse me, Ethereum Classic. I didn't read the full sentence there. Dogecoin, Litecoin, Stellar, Zcash, and Cardano and Dash. So this is amazing. And every single investment firm, bank, stock exchange, they're all jumping in. Now, check this out, guys. The US FDIC said to be studying deposit insurance for stablecoins. You guys know I got the receipts for this. You can go back and see my videos from years. I've been talking about it. The same protections you have in the traditional asset class are now coming to crypto, and that's going to help usher in more money, more confidence in institutional and retail investors. Security, insurance, assurance, white glove service, all these things we've talked about for years, it is now coming to fruition, guys. It's amazing to watch this unfold. Now, we talked about the German bank. Well, check this out. New Zealand's Easy Crypto raises $11.75 million eyes stock market float. According to Easy Crypto, the $11.75 million in a Series A funding round may be the largest sum of investment raised in New Zealand for a local startup. So these crypto companies globally are getting millions and millions of dollars in investments. Now, the people investing in these companies want a return on their investment. They're not investing to lose it, right? But they see the growth, the emergence, and the maturation that's coming for this asset class. And in order for these crypto companies to be successful, what do we need? The price to be low? No. The price to keep going higher. This isn't, is the same reason why you would invest in stocks. And so you're looking for a return. How do you get a return? The price has to go up. So how do these companies make money? Is more people coming in, the price going up, more capital? Read between the lines here, right? And this is an amazing opportunity. I wish I was an accredited investor. I've said this many times because I have the assets, but I would love to put money into these crypto companies. And this is another layer that needs to be addressed, that accredited investor laws are just bullshit. And the SEC should be allowing people to invest. Look, you can go to Vegas and gamble your money away. You can take scam payday loans and all you want. Oh, but if you want to invest in some of these companies, oh no, you can't do that. They act as the gatekeeper. So that's another conversation that's happening. But that's where crypto is so great, because it takes a lot of that power away. That's why these guys don't like crypto. They have to capitulate and bend the knee, but trust me, they don't like it, right? Like I've talked about Jamie Dimon. JPMorgan's offering a Bitcoin wealth fund. They're offering financial services to crypto companies. But Jamie Dimon, in his heart of hearts, I don't think he likes Bitcoin. I think he hates it, but I think he wants to make money off of it. So that's kind of the situation these guys find themselves in. So we're just seeing companies around the globe raising money. So New Zealand-based crypto exchange Easy Crypto has raised $11.75 million. And the round was led by venture capital fund Nuance Connected Capital. According to a Wednesday announcement from Easy Crypto, the 17 million NZD figure New Zealand dollars, I should say, seemed to have set a new record in New Zealand for the largest Series A funding from a local firm. So bullish, guys. Infrastructure being set up globally, because this is a global asset class. And I'm so excited for the future of this market. And as always, patience is the key. People get impatient. And this is why smart money often wins, because they're able to be patient and not look at the price every hour. They are looking at macro level trends, and this is how they build wealth. While everybody's, it's not everybody's fault, because we're trained by society and TV and so forth to let's play the lottery and then next Friday we'll win $1 million, right? But we've seen that's not how you build wealth. It's not how you make money, right? You have to have the long-term view, the macro view, to be successful. Now, don't get me wrong. There are day traders who use bots and all that stuff, and they do all kinds of stuff, but that takes a lot of time, and it's usually something you need to focus on all day. But if you're savvy enough, you're able to do that, and go for it. But I think the majority of people are not, right? So this is where you got to have that macro level view, guys. Anyway, lots of bullish news. And I think this SEC approval of a non-direct Bitcoin ETF, if you want to call it that, is certainly bullish. And I think, guys, there's a high probability we get a Bitcoin ETF approved this quarter. And I think, once again, the floodgates are going to open. A lot of capital. Prices are going to go insane for Bitcoin, and then the altcoins will follow as well. So what do you guys think? Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.